Today, 73% of the S&P 500 closed down in the red, and it was a bloodbath, especially for tech stocks. In today's video, we're going to cover why the market's falling, what to know, and where the action is at right now. Once you hear everything going on, you're going to realize that tomorrow is going to be even crazier.
Federal Reserve officials hinted at taking away the December rate cut today, and the market did not like that at all. Tech stocks are getting hit the hardest, actually, and I guess we'll just get right into what is actually happening here in the stock market today. So a lot of Fed speakers were out today. As we can see on the left side of the screen, there were actually multiple. So firstly, the Fed Bank of Cleveland president Beth Hammack said that the U.S. central bank should hold rates steady to keep reducing inflation. Now, that's been a big problem plaguing the Fed, is keeping that inflation rate lower and getting closer to their 2% goal. At the same time, the Fed Bank of San Francisco president Mary Daly said it's too soon to decide whether policymakers should lower rates in December or not. And then also the Fed Bank of St. Louis president Alberto Musalem said that officials should move cautiously with inflation running above the target. So we're seeing a bit of a shift in the language coming from FOMC participants. And at the last FOMC meeting, Jerome Powell actually indicated that there was a big discrepancy or a lot of differing opinions between the Fed members. And now that we're seeing some come out and support let's just say the chance of a pause, we can see on the right side of the screen that the Kalshi odds for a Fed rate cut in December is now only 49% compared to them having a 48% chance to maintain that rate and pause. And if we actually compare the data yesterday on the CME FedWatch tool, we can see that yesterday there was a 68.4% chance of a of a cut, and a 31.6% chance of a pause. Now, if we look at today, there's a big shift. Now, actually, at one point today, there was an over 50% chance that the market would pause and only a 49.6% chance of a cut. That's a pretty big one-day shift there.
Oh boy. Yeah, like when we look at the S&P 500, it was rallying close to all-time highs over these past few weeks as the, stimulus was expected to just keep on, going. But now we're starting to see the potential of a rate cut in December start to get yanked away, and investors do not like to see that at all because rate cuts tend to spur the economy and boost stock prices higher. But it looks like some of these Fed officials are thinking about holding that back in December, and this is happening at a time where there's a wave of major economic data set to release from the shutdown, and this is just making traders take a lot of risk off their books.
Exactly. I mean, people don't want to be buying into overvalued stocks right now, especially at a time where we're starting to see cracks form in the overall economy. And also, the Fed members, they have to actually go through with some clouded judgment right now, because as we can see here, Hassett even said that they're not even going to do the unemployment rate at the October jobs report that's going to finally come out. I know that they talked about this over the past few days, but it's just something that really is going to cloud, I think, a lot of traders' judgment. And again, going forward, jobs is such an important piece of the economy, so not getting that data is extremely important in the short term. But Mike, I mean, over the past few days, like you alluded to, the S&P 500 had actually gotten pretty close to its all-time highs. I mean, recently it got up to around that 68, 69, 68, 70 point over the past couple trading days. Now today, we've just had a massive sell-off come in. That was definitely a buy the rumor, sell the news situation going on with the government reopening. I know a lot of traders were very upset today to see the market falling after Trump ended up signing that bill into effect.
Definitely. We are seeing bigger moves and increases in volatility, and while sometimes this can catch traders off guard, it's in these environments where the biggest and best opportunities happen, not only in a shorter term sense, but when you have a bunch of people panic selling stocks, it opens up great long-term dip buy opportunities as well. So this is good to see volatility increase from a trading standpoint. Tom, as we look at SPY right now, what are you seeing on the charts, and what should we look out for tomorrow?
So we've talked a lot about some of these bigger levels that have been coming into play in the shorter term. I know yesterday we talked a lot about that $680 support. Today we actually saw that 680 support give out, and the SPY ended up bouncing off of it in the middle of the day and running down even lower, breaking through some very key support ranges from the past few weeks, like 674 right here, where we've seen multiple bounces. We can even see today that the SPY had an intraday reaction at that point and then even bounced off of it here in after hours. So for tomorrow, that 674 resistance, and I even like this intraday resistance that started forming today, closer to 670, 650. If we start to see those levels break back to the upside, there might be an opportunity maybe watching for an intraday consolidation move. Maybe there will be a consolidation move tomorrow. It was a pretty strange day today with the SPY down 1.6%. But if we do see the selling pressure continue, recently the SPY posted a low all the way down around 661. Now that's a pretty low point, right? If the SPY were to get there tomorrow, that would mimic the drop from today and be pretty brutal. But I think getting under that low of day from today, close to the 670 support, will be very critical. So for me, the most important level for tomorrow is that 670 range. If that starts to break down, I think that we might end up testing that recent low, or at least coming fairly close to it.
Yeah, that would be pretty crazy, and I think it's worth acknowledging how the trading environment is changing. Today was the third time in 2 weeks where the S&P 500 fell by more than 1%, and this is something that it had only done once in the previous 3 months. So this alone goes to show how much more volatile and intense the environment is becoming. And another thing that triggered today was the fifth Hindenburg omen. Over the past month, we can see, historically speaking, this is not a good sign for stock prices, especially when we see a cluster of these signals happen. We can see in a shorter term sense, the market does tend to fall, anywhere from that basically 1 day later mark all the way to 1 week later mark, and can get pretty nasty in some of these instances.
Yeah, and there's actually a lot of data here, a lot of different readings, and to see that the market would only go green 1 day later 36% of the time, and then even 3 days later 29% of the time is pretty brutal. Of course, as we get further out, like 1 month later being 36% of the time green is also a very negative reading, but this is a pretty negative statistic here, and we've seen a few negative statistics over the past few weeks, but I know people have been really latching on to the Hindenburg omen news lately, and that's been also another thing helping to drive investor sentiment and stocks to the downside. But whenever I also look at the S&P 500, we looked at some data earlier this week, looking at the amount of days that the SPY was above its 50-day moving average, and it hit a 134 level. And the other times that happened, especially in the short term, 2 days later, 3 days later, 4 days later, the market only went green one time out of those. I mean, 2 and 4 days have 0% of the time the market went green. So keep that in mind as we navigate the next few trading days.
No doubt. And Tom, this is happening in an environment where some of the most famous and bold investors out there are getting wiped out. The big short investor, Michael Burry, announced that he's going to close down his hedge fund by the end of the year, and he acknowledged that he's not quite in sync with today's market.
Yeah, that was pretty hilarious. Just to quote the letter here, he said, "My estimation of value in securities is now and has not been for some time in sync with the market." I mean, that's a pretty insane thing for somebody of his pedigree to come out and say. And he was even making X posts saying that he's going to be moving on to much better things. So who knows? Maybe we'll see something else with Michael Burry here over the next couple months. But it's something that definitely blew my mind considering his fame. And I will say those Twitter posts were a bit sus today.
Yeah, this is a crazy and exciting and entertaining environment. And as we look at the market for tomorrow, how is the schedule looking? Pretty calm, right?
Yeah, exactly. We were supposed to get some big data releasing, of course, with the inflation rate coming out this week, and then even PPI and retail sales coming out on Friday. But now that is not going to be happening. Of course, we will get back into the things with government data starting to release. And don't forget, there will be data releasing over the next couple of weeks as we start to release data, from October, even from September. So keep that in mind. Be ready for some wild releases, but it's hard to exactly say when when those releases will be. There is no really confirmed dates for many of those. But getting into the earnings for tomorrow, Mike, again, today was a pretty big earnings day. Disney reported this morning, JD, Billy. But for tomorrow, I will say things are slowing down. I guess Spire and maybe P3 Health Partners there. But honestly, I don't think traders are very interested in those ones.
Boring. All right, well, let's get right into the fun stuff then, which are some setups and predictions. And the stock that we've been talking about the most this week, ticker symbol SNDK to the downside, got obliterated today, and this was very satisfying to see. I know some people did very well with this. It fell by 14% and even much lower at its lows. We've been talking about this stock quite a bit over the past week, talking about how it's overextended and it's in a sensitive spot. We are finally starting to see this stock roll over, and while it had a phenomenal drop today, I think it can fall even more. Of course, that doesn't mean it has to be red tomorrow, but I think even going into next week, there is some good risk reward playing into the downside. This is one of the most volatile stocks I've seen over the past few weeks, so keep that in mind, but this thing is crazy and it's still on my bearish radar.
Yeah, that was one hell of a call out, Mike. Down 14% today, pretty much at the close, even more intraday. And, that was a really good turnover this morning as well. And I thought that it was really good for it to break that structure of higher lows that was starting to come into play. And very early on this morning in pre-market, that structure started to give out, and it really helped traders to see that and identify it. So let's go. That was a fantastic opportunity for many traders out there today. But with my first stock, I'm looking at Tesla for a 396 breakdown tomorrow. So Tesla was one of these stocks helping drive SPY down, closing down over 6%, which is a pretty big move for a stock like Tesla. Now, what I'm looking for is a break below this $400 psychological support range, and specifically below the low of day today at 396.50 to really confirm that. But if we go to the Bookmap, we can see that today there was around 517,000 shares that hit on the volume as we started to see Tesla give out at that key $400 mark. Now, again, for tomorrow, I'm watching 396.50. There are some buyers stacked up around 395 as well. So if you wanted to be really safe, maybe wait that extra dollar, especially with how much Tesla moves. It might not be too bad of an idea, but I'll be watching for that low of day to finally break down and just for a nice continuation play, because as we know, a lot of these stocks in the short term have gotten overextended. Tesla was one of them in my eyes, and as it broke support today, again, I think it had a really good structural breakdown.
Sounds good. Yeah, and it definitely had quite the move today. Another stock that is close on watch is KBE to the downside. There was some recent action with the big money to the downside with this one, which is always nice to see. But basically, this ETF follows the banking industry, and we saw a whole lot of profit taking out of that area of the market today as well. There are two real leaders in this industry, JP Morgan and Goldman Sachs. JP Morgan sold off quite a bit by around 3.4%, and then Goldman Sachs fell by around 4%, and it actually had the biggest drag on the Dow. KBE is just a good general ETF for the banking industry, but there's even other ones like XLF that is a pretty popular ETF. Either way, KBE is on my bearish radar over the next week or so. I really like today's negative action, and it also helps that the market is weakening as well. Plus, there's some recent big money action on it. Either way, KBE is on my bearish radar.
Yeah, this is actually almost setting up like a bit of a dead cat bounce type of play, Mike. I would not be surprised if we started to see KBE sell off through its recent support here around 57 from today and, continue to the downside. Those banks definitely had a pretty stark turnaround at the end of the day there. But with my next play, I'm looking at BMNR or Bitmine Immersion. Now, this is a stock that was made famous as Tom Lee joined the board of this, but it has been pulling back a lot lately. And one thing I've really been looking at in the short term is crypto starting to pull back as well. Bitcoin fell back through $100,000 per coin today and even broke through its recent low. So I think that's a big negative sign for a lot of these more crypto related companies like BMNR. Now, if we do see BMNR start to pull back through that support range that I mentioned, which is its recent low, right around 35.80 or so, then I will be watching for a larger sell-off and pullback with BMNR. It's a growth stock, and a lot of these growth stocks stocks were down today. Just take a look at the bottom end of my watch list here. My gosh, I mean, Bloom Energy, Solar Edge, APLD, IREN, AQMS, SoFi, so many stocks were down over 10%, and many were even pushing it, like CoreWeave at 8% there.
Crazy. All right, well, let's jump right into today's momentum plays then. And with the first one, we have Chevron, ticker symbol CVX, to the upside.
Yeah, oil stocks were pretty surprising today. If Chevron can break through 156.20, then watch for an upside continuation.
All right, with the next one, we have ARM, ticker symbol ARM, to the downside.
Yeah, popular tech stock from the past couple of years. If ARM ends up falling under 138.40, then watch it to the downside.
And then with the last one, we have good old Palantir, ticker symbol PLTR, also to the downside.
Yeah, we called this one out below 180 yesterday, and it sold off in a fantastic way today. If it breaks down under 170.75, or even just 170 if you want to be really safe at the whole dollar level, then watch it to the downside as well.
Sounds great. So we have these three stocks on the radar for potential continuations if and only if they break through the levels listed. As always, focus on making smart, long-term oriented trading decisions. Make sure to protect yourself above anything else. Cut losses quickly and, just make smart, long-term oriented decisions. If you need help with that, check out the Key Lessons channel in the Stocked Up Discord. It is completely free. And besides that, we're not wasting any time, and we're going to jump right into today's big money trade. And today, we are looking at ticker symbol COHR. Today, the trader here put $727,000 into the COHR 140 strike put options that expire pretty soon on December 5th of 2025. Looking at this trade here, the stock fell quite a bit today, over 10%. It is an American manufacturer of optical materials and semiconductors. And in addition to just the market-wide selling that we saw today, one of their major shareholders, Bain Capital, disclosed the sale of over $1 billion worth of its stock. These put options are already in the money. They have a relatively short expiration date, so the trader here is positioning themselves to benefit off the stock continuing to fall in the short term. Something else that's interesting is that it appears that this trade is also the result of a previous very successful put trade being rolled, more specifically the 155 strike puts for November 28th, which is a good sign. Very interesting setup, and I'm excited to see how it does, especially with this relatively short expiration.
Yeah, exactly. It expires December 5th, which is under a month away here. And, looking at COHR today, it definitely sold off pretty well. And as I guess that trader started to reposition or roll into these 140 puts, it's good to see him be right around the money or even in the money. So I think that that's a great sign for the shorter term. I will say COHR is running into a big area of support right now around this like 136 to 140 range. So just keep that in mind for tomorrow. It did actually bounce off of like that 137 area earlier today as it started to drop, but again, it was a 10% move, so it had to find some support at some point today. But with it being so short term, one of the big things I'll be watching for is this resistance overhead right around 144 to 145. If we start to see that break back to the upside, of course I would be a bit worried about the play. There still is a little bit of time to it, but ultimately, hopefully tomorrow we get a nice downside continuation with the market, and then this big money trade will start off on the right foot, so to say.
Exactly. So either way, keep it close on watch. And if you are new to the channel, welcome, and definitely consider obliterating that subscribe button every single day. It takes us a long time to make these videos, and we cover basically everything you need to know, whether it be big money trades just like this one every single day, or the most important news, upcoming events, earnings, market moving news and information, historical statistics, SPY levels and analysis, and so much more. We cover it all, and if you subscribe, you'll get our videos recommended to you more often. And if you're into short short-term trading, definitely check out that first link down below. Today, the Surge bot hit it out of the park with some of these put options. As we can see today, there were some great SoFi put options called out that popped up by 438%, some Hood put options that moved up by 343%, some Tesla put options that moved up by 278%, some IREN put options that moved up by 166%, some SOUN put options that moved up by 133%, and many others. Of course, there were a handful of duds sprinkled in there as well, but very good day. Basically, the StockedUp trading floor gives you full access to our army of custom trading robots, daily big money plays, weekly live events. You can chat with Tom and myself all day long and access more tools than you could possibly ever need for short-term trading, and we're constantly adding more to it all the time. So as you sign up, it just gets better and better and better. You can save quite a bit with coupon code BIGMONEY down below, so definitely check that out. And let's also give a giant shout out to today's member of the day, Elite, in the StockedUp Discord, who had a beautiful day today with some really good plays with SNDK, SMH, and LRCX. So huge shout out to you, Elite. Keep up the great work going forward. It is beautiful to see posts like this one. The market's heating up quite a bit. There should be some great trading opportunities in the short term. When volatility increases, we see bigger moves, and options premiums especially rise as the VIX is. Definitely check out that coupon code BIGMONEY down below to get in on the action. And besides that, let's crush it in the market tomorrow.